And markets are bracing for another major sell-off this morning on Wall Street as economies across the globe settle in for President Trump's tariff reality. Fox News Digital's political correspondent Brooke Singman now with more this morning. Brooke.
Good morning, Maria. That's right. So Asian markets falling sharply today as President Trump, speaking to reporters on Air Force One, says he does not want a trade deal with China unless the deficit is solved. Listen to this.
When they look at the fact that we have $1 billion trade deficit, when you look at the trade deficit that we have with certain countries, way over $1 billion per country. But with China, it's $1 trillion. And we have to solve our trade deficit with China. We have $1 trillion trade deficit with China.
Is open to tariff negotiations with worldwide leaders. The president says he has already spoken with some who are urging him to lower some of these tariffs.
I spoke to a lot of leaders, European, Asian, from all over the world. They're dying to make a deal. But I said, we're not going to have deficits with your country. We're not going to do that because to me, a deficit is a loss. We're going to have surpluses or we're at worst going to be breaking even.
Stock futures are down ahead of the market open this morning after Dow futures fell more than 1,500 points last night. Trump expressing uncertainty about today's market performance, but he is maintaining that the tariffs will help the U.S.
I don't want anything to go down, but sometimes you have to take medicine to fix something. And we have such a horrible, we have been treated so badly by other countries because we had stupid leadership that allowed this to happen. Now we have hundreds of billions of dollars is pouring into our country. On a monthly basis, it's pouring. It's already started because I put tariffs on. And eventually it's going to straighten out and our country will be solid and strong again.
Cryptocurrency also dropping more than 6% last night, and the markets are expected to open back up this morning at 9:30 Eastern Time. Maria?
All right, Brooke, thank you so much. Brooke Singman, the White House is confirming that more than 50 countries have reached out to begin trade talks as investors raise their recession outlooks. Treasury Secretary Scott Bessent dismissed the need for a recession over the weekend. Here he is on this program last month with the same sentiment. Can you guarantee that we're not going to have a recession?
No reason we need to have a recession. Could we have a pause as we go from this incredible level of government spending, which is just unsustainable? If we had kept going the way we were, we would have been in a financial crisis. And President Trump has put the brakes on this. We are going to get this spending under control. We are going to bring manufacturing back home, and we are going to make the country more affordable for working Americans.
Joining me now is TJM Institutional Services Director James Iuorio. James, good to see you. Thank you so much for being here. There are reasons to believe that we saw some signals of perhaps a de-escalation of this over the weekend when we heard from a number of countries saying they want to negotiate with the White House. What is your reaction to all of this morning?
So to me, it doesn't really matter unless it's China that's coming to the table to negotiate. 170 different countries tariff us. Most of those doesn't really matter to our bottom line. With China, it does. To me, it's like, you know, an old Western movie and there's a gunfight and then at the end, it's just the bad guy and the good guy left looking at each other. And that's what we're angling towards right now. So it doesn't matter when Trump says things like, we got to get this trade deficit thing taken care of. Well, that's a tall order. And that's why the stock market doesn't really like that. It's 3-to-1 what we import from them versus what they import from us. To try to get that to be 1-to-1, that's something that would take decades, not years. And for him to be saying that that's his goal right now, those kind of things are what scares the market. It's not the changes, it's the pace with which he wants to make them.
Yeah, I mean, and the pace has been swift. But, of course, Netanyahu is at the White House this morning. The tariff situation is going to be a part of the conversation. We could see a deal there. We could see a deal with Vietnam. You're saying even if we see a free trade zone in Europe, it doesn't matter? You need to hear is China for you to feel like this is going to de-escalate?
Mostly yes is what I'm saying. I don't want to say it doesn't matter, because it definitely does matter. But everything is really pointed towards China and China toward us. One thing this is going to sound somewhat paradoxical, but one thing I kind of like is that all markets around the world are getting pummeled today. I'd much rather see that than just our markets getting pummeled, because that would be the market telling us that we're going to lose this and our economy is going to take the brunt of it. Right now, with the market saying it's mutually assured destruction and everything is going down. That's one of the reasons that gold is actually up today. And of course, treasuries have been, going through the moon for the last couple months, because that's one of the few things that people can buy. But I think it matters in Europe. It just matters a lot more in China.
Okay, let's take a look at yields this morning as investors are piling into U.S. Treasuries on now these worries about stagflation. Gold prices, as you say, above $3,046 right now, and the 10-year is below 4%. Federal Reserve Chairman Jay Powell says the larger than expected tariffs, he's calling them that, will likely boost inflation, slow growth. He's pushing for a wait-and-see agenda on rate cuts, but the market is expecting 4 rate cuts at this point. Here's Powell. Watch this.
The tariffs are larger than people were generally expecting. That much now at this point. And you'll know more as you start to see the effects on the economy. So as the months go by, it's hard to say exactly when you'll know. We're just seeing that these are new policies, not just the tariff policies, but the other ones as well. And there'll be regulatory changes, significant regulatory changes. You have to really look at all of that to see what the overall effect will be.
President Trump is urging Powell to cut interest rates and, quote, stop playing politics, James. So TD Securities is revising its end 2020 forecast for the 10-year to 3%. That's down from 3.8%. We've gone from expectations of a cut of 1 cut from the Fed in June to a cut of 3 times this year in a hurry. Your thoughts on where the yield ends this year and how many cuts the Fed makes?
So a couple things. First of all, if we are to believe the data from the last 2 years, that 10% of the asset holders in this country were driving 50% of the consumption. Analysts will always tell you that the stock market isn't the economy and the economy isn't the stock market. And that's usually true. This time it was. Asset prices going through the roof was fueling the demand. Now, if we believe that inflation is always and everywhere a monetary phenomenon, like Friedman told us, then zapping $5 trillion in 2 days from the stock market should go a long way in getting rid of the inflation thing. So do I think a recession's coming? Yes, I think we're probably already there. If you take the buying power out of the people's hands who were driving the inflation, who are driving the expansion, let's say, of course it's gone away. So I think we're going into recession now. I think the Fed is going to ease. I think the U.S. Treasuries are the last man standing, and gold is going to join them now as the only things you can actually buy in an environment like this. Yeah. That being said, I think most of this is over, and I think Donald Trump's proclivity is to walk back things when they seem like they're the most serious. This is like Lucy with the football. We've fallen for these things before. And that right now the risks exist for him to talk nicer about tariffs and about global trade and markets to rebound, in my view.
So the bottom line is you're expecting a cut in June, James?
I'm expecting a cut in June now. Yes, I definitely think we are. And I think the market's going to be right about that. Again, I think the reason was inflation. Inflation is less of a worry now.
Yeah, oil prices, I want to point out, below $60 a barrel this morning. James, good to see you. Thank you so much, James Iuorio. We got rates plummeting, you got oil prices plummeting, and we are just getting started this morning.